So how is it that we are hearing that Canada is now in a recession, and yet we still see prices rising in Calgary because the median sale price went up this spring? Now you'd think the story would write itself, kind of like a recovery. And maybe you should buy before this all goes crazy. Well, that story is wrong. The median climbed while the real value of a Calgary home actually fell. And this May, fewer homes sold than any spring in the past 4 years. Now, after 22 years and almost 4,000 families helped move in Calgary, here's what matters. This kind of shift hides inside the median numbers for months before it corrects. So you gotta read the real number now so that you're ahead of it. So let's kind of start with how many homes actually changed hands. So in May, it's always really busy. Spring listings hit, families move around the school year, deals close, a lot of them in May. So May is the high water mark every single year. Now here's the problem with that. The high water mark keeps dropping over the last 3 or 4 years. So in May of 2023, you can see in the chart here, we had 3,126 homes sold across the city. In 2024, we actually had 3,097 sell at the same time in May 2024. Now, May 2025, we saw it drop again to 2,570. And you can see these are clearly the peak months of sales year over year. Now, this past May, we only saw 2,167 sales. That's a 31% decrease year over year, basically over the last 3 years, and the peak is still the peak right now. It's just a smaller one every single year. But a shrinking market really shouldn't be the headline. The headline is what those sales are actually hiding beneath them. So here's what the median numbers kind of are lying to you about. So prices went up. What's the problem? Across all those May sales, the median price climbed from about $509,000 in 2023 up to $592,000 this year, up about 16% in 3 years. That sounds like a steady appreciation, but it isn't. Look at what got bigger. The median home that sold went from 1,200 square feet up to 1,387 square feet over that same 3-year period. Now, the typical sale isn't worth more, it's just a bigger home. Now, when you focus on that and measure price per square foot, what a home costs for each foot of space, the cleanest year-to-year comparison, the real number actually starts to show up. And it actually peaked in May 2024 at $422. And then it fell in 25 to $415. And this May, it was only $401 per square foot. So did you catch that? Up 16% on the median, down about 5% on the square foot. Same market. The median is kind of lying to us. So if you own a Calgary home and you've watched the median tick up, this is the part that matters to you. Your equity didn't grow the way the headline is saying. And there's one reason the median got pulled up like that. And it's sitting in the kind of home that has stopped selling. So let's look at what dropped out. The homes that hold the median down are the cheap ones, apartments. And apartments stopped trading. In May 2024, there was 907 apartments sold in Calgary. This May was only 403, less than half. Apartments went from nearly 30% of everything that sold to under 19%. Now, detached homes, meanwhile, they climbed from under half the market up to 55% in that same time frame. So if you strip out all these cheaper properties, you take that smaller product out of the math that we're doing, and of course, that median price is gonna float up. You remove the bottom of the range, and that's the whole trick. And here's a wild thing. Apartments aren't just selling less, they're actually worth less too. Apartment price per square foot is down about 8%, and the benchmark price is down about 9% just year over year. Apartment months of inventory. So how long would it take to sell everything that is currently listed? Well, that's about 5.1 months across the whole city. Anything above 4 months is sitting in a buyer's market, and apartments are for sure in a buyer's market, full stop. So if you're a first-time buyer eyeing a condo, that's true leverage. You gotta buy in the right neighborhoods and in the right buildings, but you can really take your time. You can negotiate hard and walk if the seller isn't willing to move on lots of different things. The condo seller is the one under pressure right now. And that is exactly what our Calgary neighborhood matchmaker can help you with, which is linked below. But here's the part that changes everything. Calgary isn't in one market doing one thing. Split it by quadrant and you actually get two different, kind of like nearly two different cities. Now let's kind of look at the map a bit. So we all know the west part of the city is doing well if you watch our videos, because we've talked a lot about it over the last couple months. And the west and the northeast, they're just like fighting with each other. So let's start out west. In Aspen, West Springs, that whole corridor, detached price per square foot is almost 12% up in the last year and nearly 20% up over the last 3 years. And the West sits at 1.75 months of inventory. That's under 2.5 months, because that's the cutting point where we get into a seller's market. So 1.75 for the whole West zone is really, really tight. And in this area, sellers still hold a leverage and homes are still moving pretty quickly. Now, if you flip that to the Northeast, same city, same month, the Northeast detached price per square foot is down 11%. Well, that was going up. This is going down 11% in a single year. It's now below where it sat in 2023. The Northeast is at 4.2 months of inventory, which is in a buyer's market. Now, one side of the city is climbing and the other is kind of starting to fall apart. Think about that. The flat-looking citywide average is two markets pulling in the opposite direction, kind of canceling each other out. So if you're relocating and trying to figure out where to land, this is the thing no one just really hands you. The citywide number is telling you nothing. West and Northeast detached are moving in the opposite directions right now. So you've got a shrinking market, a median that's lying, and two Calgary zones that are just pulling apart. Here's what all of it means if you're actually trying to make a move sometime this year. Calgary in 2026 is a divided market, and the line runs straight through the move up family. Detached in the west and the established south is still a seller's market. Real square footage strength, low supply, quick sales. That's the half you'd be buying into. But the home funding your move, you know, it could be a condo, a townhouse. Maybe you're moving from the Northeast to one of these areas. You could be sitting in the other softer half. So it's kind of confusing because you could be strong on the buy side and soft on the sell side. And that gap is the whole game this year. Now, I don't know where you're moving from, where you're buying into, but you have to understand those two markets when you're making that move. And this is exactly what our team walks our clients through, so you have a deep understanding of what you're selling in and where you're buying in and how do they play or fight against each other. Now, all of these stats, even though they're fighting each other, it's not a reason to wait. It's a reason to know exactly which areas sit on the strong side before you start. And that's exactly the reason that we made the Calgary Neighborhood Matchmaker, and it's built for this exact thing. You put in your situation, your budget, and what actually matters to you, and it points you to areas, neighborhoods, sitting in the strong half, or areas that work really, really good with your lifestyle. Then it pulls homes for sale right in there. It's free, it's all in the link below, so go grab that. So, did Calgary prices climb this spring? Kind of, yeah, the median price climbed, but the market underneath, it kind of got smaller and split in two. Now, there's some charts that I want to show you that kind of may surprise you. It did for me. So let's take a look at this. So the inventory for the city this month is currently sitting at 6,752. When we look at the new listings that came on, we're sitting at 4,226 new listings. So it's up from last month. And 2025 was actually higher, which is this blue line right here. So we are less new listings coming on the market than we saw last year. However, our inventory, it's like nearly the same, because you can see that blue line is like right here, right? It's following it. So it's kind of an interesting thing that ultimately we have less new listings, less sales, but similar inventory. So that probably is a story right in itself. Now, the number of sales was 2,162, which is nearly the same as what we saw last month. When you take those out and we kind of just look at what happened last year, you can see the blue here and the blue here. It jumped and it went up. We didn't see that happen this month, which we just were talking about. So this really, I think this one chart can help you understand a little bit about what's going on. If we look at this, you can see the pattern, because the red is for sales, blue is for the new listings, and gray is for the inventory level. Now, we saw a big increase last year, same time, right? We saw that go up and we saw that increase the inventory like we did. We kind of topped out around, I think it was about 67, 68, 6,900 listings. This year, we're kind of seeing the same thing, but here's what's shifted. This sales number did have a higher number than what we see this year. So if this is the peak, we're probably gonna start seeing this decrease, probably bump in the spring, or in the fall, sorry, and then do the similar path. But that's a lot less of sales that are gonna happen when we get into kind of looking at the market. When we see this, you can see this is going up, this is going up a little bit less steeper than the inventory, but the sales number, that's at a different angle, and we're not seeing that kind of as strong as we've seen in past years. All that to say, we are sitting at 3.12 months of inventory for the whole city, which is right in that balanced market. Your detached homes are sitting at 2.45, your semi-detached is at 2.73, your row homes are at 3.35 months, and your apartments are at 5.14. So semis and row homes, townhomes, are sitting in a balanced market, apartments in the buyers, and detached homes across the whole city are barely in a seller's market still. When we break down the months of inventory, when we're looking at the zones of the city, again, one of the things that I'm always looking for is the 30-day higher or lower than the 90-day, because that's kind of the trend of what's gonna be happening as we walk into the future months. And the only area that has a 30-day that's the same or higher is the north zone. So you can see that where it's 3.44 versus 3.39. Every other area, barely the city center, it's pretty much the same, but every other area is showing it's dropping. And you got to remember too, we're in the middle of the spring market, right? The market itself is actually just shifting a little bit. So this is not fully going to tell us what is June going to do. I honestly think when you look at this chart, this kind of says to me more what June is gonna do, because if the sales are lower, inventory is climbing, we could pass 7,000, 7,500 listings in our whole city if sales drop, but we still have a healthy amount of homes coming on the market. So it really depends your price point, your area, your property type, all of those things in what it's gonna look at. But when we break down into just detached homes, what are all the zones of the city looking like? So you can see what some of the biggest pull downs, you can see like the Northeast, that's a big one. Same with Northwest. All of these are pointing downwards except for the East zone, which is going the opposite. And so the East zone is slowing down in the middle of a spring market compared to the rest. Now, let's look at semi-detached. Semi-detached, this one, clear concerning number. When you're seeing a 5.67 30-day months of inventory compared to a 2.96 90-day for the north zone for semi-detached properties, that's a pretty wild number. This one's also very wild too, is the Northwest. Like, look how big the Northwest has come back compared to what it was. 7 months of inventory over the 90 days, but it's sitting at 2.75. Now, when we look at townhomes, I honestly thought this was a mistake. When I had to check this, triple check this chart, because what in the world is this number doing up here? So I looked at it. Everywhere else except for the Southeast and clearly the East, their months of inventory for 30 days was pulling the 90-day down. Southeast was up and the East is way up. Here's what it looks like. I actually took a screen grab of this because it says 19 months of inventory compared to the 4 months for the last 90 days. Here is the East zone and all the actives and all the sales. There was only 3 sales over the last 30 days, and there's 56 active townhomes in the East zone. Look at this. Belvedere, like these new areas. You can't really see that well, but these new areas sitting on this side of Stony, there's so much inventory for townhomes sitting in those neighborhoods that it's just kind of skewing the whole stats. So this again shows you can't just go off of zones. Like, let's take for an example, I don't have real numbers, but if you looked at the West zone, just because everything in the West zone, like detached homes, are doing really good, doesn't mean all the neighborhoods in the West zone are doing as good as the others. Same thing here. So if you're gonna look, I don't know, If you're gonna look in Dover, I mean, there's only 2 actives, but like here, Forest Heights, you have a handful of actives in 1 sale. Pembroke has a sale in there, but all I'm saying is really dig into those neighborhood numbers as much as the zone numbers as well. And apartments, every area except the north zone is pulling down. North zone is pulling up. It's 6 months of inventory. But you can see here, when you look at condos, the only zone that is kind of in a balanced-ish market is the west zone there. So the city is all over the place. There's a lot of confusing things. There's a lot of like shakeup that's kind of happening in our market. And what I want to show you is just some of the best and the worst neighborhoods based on the 90 days months of inventory. So let's look at some of the top performing neighborhoods first. So the first one is University Heights, sitting at 0.5 months of inventory. And I forgot to map some of these, I'll be honest. Which is sitting right, University Heights would be right by the University of Calgary, which would be sitting right in this area, somewhere in there. So that's 0.5 months of inventory. Cougar Ridge, which is sitting up here, is also at 0.5 months of inventory too. El Boya is sitting at 0.67, and Diamond Cove, which is down, actually that might be it there. Yeah, this might be it here, is sitting at 0.75 months of inventory. And Palliser is sitting at 0.94. These are all neighborhoods that the whole neighborhood is moving under 1 month of inventory. That's really, really quick. Now on the flip side, you're gonna have the worst performing neighborhoods. You've got East Village, which is right here, sitting at 10.5 months of inventory. Red Carpet over here at 11 months of inventory. Greenwood and Greenbrier, which is actually, take 16th Ave, it's like right up here somewhere. That's about 11.25 months of inventory. Eagle Ridge, which is down right by the reservoir, so like right in here somewhere. That's about 12 months of inventory. Meadowlark Park is at 18 months, and Amble Ridge, which is a new neighborhood, is sitting at 24 months of inventory. So those worst ones, you've got a combination of some higher end, a lot of townhome condo neighborhoods, and brand new. That's kind of the mix when you look at this. So if you're gonna be moving up into the strong half of this market that we talked about a little bit earlier, the single most expensive mistake is picking the wrong neighborhood, paying a premium for an area that doesn't deliver. Now, you don't want to buy into an area, a pocket that's kind of in that second half. Ideally, you're going to find deals in some of these slower neighborhoods. You're going to find really, really great options. So here's what I want you to do. Run the matchmaker tool, see what's on your short list so you can get a sense of some areas that might be really, really good for you and your family. And then I want you to watch this next, because moving in the summer could be the best or the worst decision that you might make. And I don't want you to make the wrong decision. So get into that one right there, and we'll see you over there.